Has your home loan been knocked back by a bank? Well, Australian banks are stricter than ever. And today we're going to go through reasons why your home loan might have been declined. So let's dive right in. In 2020, lenders are stricter than ever, and they all have different policies and requirements. So navigating through the lending process has never been harder. As we said, we're going to go through reasons why, if your loan's been declined, it might have been declined, and remembering not all banks are the same. So whilst you might get declined by one lender for one reason, you might actually get approved with the same scenario with another. The first reason we see why banks knock back applications are because of postcode restrictions. Now, everyone knows to go out and get a pre-approval and make sure that you're ready to rock and roll when you start looking to find property. Now, a lot of people don't realize that some banks have postcode restrictions in certain areas, as well as development registers. What this means is if you find your dream home in an area in which the bank doesn't really want to lend on with minimal deposit, you can get yourself declined. We had a recent example of this with a customer of ours buying in Crow's Nest, New South Wales. They went directly to their bank. They were entitled to mortgage insurance waivers, being it that they were lawyers, and they found the purchase of their dreams. So they were wanting to get this over across the line. The bank looked at the property and they said they're not able to waive the mortgage insurance in this area, and they had restrictions on that area in terms of what the maximum they'd lend on. This meant that the loan application didn't proceed with that lender, and they came to us to find a solution. Lucky enough, we were able to find a lender that was able to get the insurance waived as well as approve their loan within the timeframes we had allocated. The second reason we see why lenders knocking back loan applications is for tardiness on accounts. A lot of people don't realize that the banks can actually get your credit history through your credit report. As well as that, they'll look at your day-to-day transactional accounts. Now, if you've got overdrawings on that day-to-day account, whereby you might be taking more money than you've got available and you get some small fees, or you have over the limit fees on your credit cards or even late payments, this can have a major impact in your loan getting approved, because it's demonstrating to the bank that you're not quite managing your funds properly. So be careful of this one. This is a big thing that catches a lot of people out. We've recently had a customer in which that they saved an excellent deposit, over $90,000 over 6 months. However, they're a little bit tardy on their other accounts, having late payments on their credit cards, overdrawings on their day-to-day accounts, but we could clearly see that they were saving the money up. Nonetheless, the banks found this really hard to get their head around and even approve the loan, because the customer didn't demonstrate that they had good, clean account conduct on all accounts. Now, keep in mind that the banks can ask for more history. Although they ask for 3 months, they can go back 6 to 12 months to understand and get a flavor of how you're operating. Some quick, easy wins here are: make sure you don't go over limits on any credit cards, have any late payments on credit cards, or even overdrawings on accounts. As mentioned before, it's all live on your credit score now, so the banks can easily see this because the data goes back as far as 2 years. The third reason why your loan could get knocked back in 2020 is your employment history. Now, the banks look back as far as 3 years of your employment history, and if you've recently started a new role and your lender's mortgage insurance, they do have criteria in which needs to be met. For example, if you've had more than 1 month between jobs, the banks can knock this back, especially in mortgage insurance territory. The other thing is, if you're on a contract, a short-term contract, where you've only started the contract and you've been less than 6 months in the role, once again, another thing why banks might knock back your loan application. Now, as before mentioned, the banks will look back as far as 3 years history. So depending what industry you're in, this could actually work for or against you. For example, we know in the IT industry, it's pretty common to have short-term contracts. Now, if you've just started in the industry and you've got minimal deposit, a lot of banks are going to struggle to help you with this one. However, if you've been in the industry for a long period of time and you can demonstrate this consistently over a 2-year period or even a 3-year period, the banks are going to be more willing to accept your current role, even if you've been there for a very short period of time. So that's it for today, guys. Remember, your loan could get knocked back for 100 different reasons. We've covered the 3 that we felt were the most common. Now, if you have any questions, hit us up at huntergalloway.com.au. And as always, thanks for watching.